Street means a lot of people have questions about all this investing. So we have Jim Huntzinger, BOK's Chief Investment Officer, with us this evening to answer some of those questions. Thank you so much for joining us.
You're welcome.
Let's start with President Obama's comment. What if people are nearing retirement age and they don't have time to wait for this turnaround? What can they do?
Well, first of all, we'll hope that he's right, that the turnaround isn't too far down the road. But in case you are approaching retirement, you really do have to take matters in your own hand. And you can't wait around for the market to come back. And so you really got to have more fixed income and less equity, more stability in your investment portfolio, and not hope that the equity market's going to be able to come back and regain the ground that's been lost. You can't afford to do that if you're going to retire in the next 5 years.
What about folks who are younger? Is it a good time for them to get in, or should they also be a little leery and stay out?
Well, it's a different perspective, I think, if you're younger, and it's perfectly fine to stay in and continue to make contributions to your 401k and your allocation to equity. I think it's okay to stay there. We will get through this at some point in time, but there isn't any doubt about it that at this point anyway, we're really not past the problem, and so it can go on for many more months. And even young people need to be careful here, but on the other hand, I think we are finding clearly that the equity market is cheap by many, many measures. We just simply have less confidence today than we've had for a long time.
Some people are even saying it could go below 6,000. Do you think that could happen? And if so, what's that going to mean?
Well, it certainly could happen. We hope that it won't. We've covered a lot of ground, but clearly at this point the economic news is such that you can't predict that we're past the worst. And so all the economic data that you look at, and I look at on a regular basis, there isn't anything yet that shows that we're nearing the turnaround. And so yes, the Dow could break down even further, the S&P even further. At this point in time, we just simply don't know where the bottom is.
So what can we do right now that's a little bit safer? Should we take our money out of our 401k or out of our investment accounts and put them in savings accounts or money markets or CDs? Is there anything safer we should do right now?
Well, inside 401k plans, of course, you want to leave the money there and you want to continue to contribute. Many companies also match those contributions, and that's free money. Employees need to take advantage of that. You can reorient your allocation from equities to more fixed income if you want to have a little safer allocation. There's nothing wrong with that. And certainly money market funds and CDs are excellent options for people. They don't return much, but you're not going to lose anything in those kind of investments either.
Kind of don't take so much risk, but don't get so much gain.
That's right.
All right, Jim with BOK Financial, thank you so much for joining us.
Well, the falling economy